Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the complex world of business by digging into the official documents that companies have to file. Today we have a really interesting one from Huntington Bankshares Incorporated. It is an 8K filing, which usually means there is some important news that the company needs to report right away. And let me tell you, this one's all about dividends. Before we dive in, if you like breaking down financial jargon into plain English, make sure you hit that subscribe button. Also, we have a fantastic community over on Discord to discuss these filings further, with a link in the description below. So, the earliest event reported here is the 22nd of January 2026. This filing essentially tells us that Huntington Bankshares Incorporated, or HBAN as it is often known, has made some key announcements regarding its dividend payments. Think of it as them letting the whole world know about the money they are distributing to their shareholders. This is what is called a current report, meaning it is for really important, timely information. It is not a quarterly or annual report that gives you a broad overview of everything happening over a longer period. This is for specific events. Now let's get to the juicy part, the dividends. Huntington Bankshares announced that their board of directors decided to pay out cash dividends. This isn't just for their common stock, which is the regular stock most people think of, but also for several classes of their preferred stock. Preferred stock is a bit different from common stock. It usually pays a fixed dividend and has a higher claim on assets if the company were to go bankrupt, but often comes with fewer voting rights. There are a few different types of preferred stock they mentioned here, like Series H, Series I and Series J, each with their own specific dividend rates. For their common stock, they are paying out $0.155 per share. This dividend is going to be paid on the 1st of April of 2026, and you had to be a shareholder on record by the 18th of March of 2026 to get it. What is interesting is they mention it is unchanged from the prior quarter. This signals stability in their dividend payout strategy for their common shareholders. Now, let's look at those preferred stock dividends. They declared a quarterly cash dividend on their 4.5% Series H preferred stock. This is the one traded under the ticker symbol HBAMP on the NASDAQ exchange. For this specific stock, they are paying $11.25 per share, which works out to $0.28125 per depositary share. Remember, depositary shares are just a way to divide up ownership of preferred stock into smaller, more manageable pieces for investors. These preferred dividends, along with the common stock dividend, are all set to be paid out in April of 2026. They also declared a dividend for the Series J preferred stock, which you might see as HBAN on NASDAQ. This one has a higher dividend rate of 6.875%. The dividend is $17.19 per share or $0.42975 per depositary share. It is important to note that these preferred stock dividends are payable a bit later than the common stock dividends on the 15th of April 2026, with a record date of the 1st of April 2026. So, what does this all mean? Well, for investors, it means a predictable stream of income. Huntington Bankshares is demonstrating its financial health by continuing to pay out these dividends. It signals that the company is generating enough profit to share with its owners. This kind of consistent dividend policy can be attractive to income-focused investors. It also shows confidence from the management team and the board in the company's future, as they are committing to these regular payouts. This other events section is where they detail the announcement itself. It is pretty straightforward. They are just formally reporting the dividend declarations made by their board of directors. It is a required disclosure to keep investors informed. Often, these filings will attach an official press release. That is what Exhibit 99.1 is here. This is usually the more polished, public-facing announcement that you might see on the company's website or in financial news outlets. It serves to elaborate on the details mentioned in the filing. And finally, this report is signed off by an authorized representative of the company. In this case, it is Marcy C. Hinks, the General Counsel. This is a formal requirement to acknowledge that the company is responsible for the information provided in the filing. Now, my take on this. Huntington Bankshares is essentially saying they are on solid ground. By declaring regular, unchanged dividends on their common stock and continuing to pay their preferred dividends, they are projecting stability. In the banking world, especially after recent economic shifts, consistent dividend payouts like this can be a sign of resilience. It suggests the bank's earnings are stable enough to support these distributions without needing to cut them. However, it is always crucial to look at the broader financial picture beyond just dividend announcements. Are their loan portfolios healthy? How are interest rates impacting their margins? This filing doesn't give us that deep dive, but it certainly paints a picture of a company that is managing its operations to provide returns to shareholders. The lack of change in the common stock dividend can be seen as both a positive for stability and maybe a slight caution if you were hoping for growth signals in increased payouts. It is a steady as she goes approach right now. Alright, that is our breakdown of Huntington Bancshares Incorporated's latest filing. What is your take on these dividend announcements and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out. And subscribe for more deep dives into corporate finance. And don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.